Of course, there are tax benefits for having a spouse. In a situation where, let's say, you passes on and you nominate your spouse, your surviving spouse, as the beneficiary of things like life cover, or for that matter, you bequeathing some of the assets to that particular spouse. There are certain tax benefits for that, which is brilliant. Yeah, for being married, or for that matter for having someone as a spouse, because of course permanent life partners also can be considered to be spouses, right? So which means that you could benefit from tax point of view. What do I mean? If let's say you passes on and you nominated, say, your spouse as the beneficiary on, say, let's give example of the life policy, that particular life policy, then it means that when the spouse gets to be paid that particular uh, payout on that life policy, then executor's fee is not going to be applicable on that particular life policy payout. Now, equally so, remember, as much as is paying directly to the wife or the surviving spouse, is still going to be considered what you call property in your estate, therefore potentially be subjected to an estate duty. However, because you bequeath that payout to the surviving spouse, it's also excluded for being exposed to an estate duty, which is a tax that gets payable upon someone's death in terms of their assets or their dutiable amount of the estate that they will leave behind upon their death. So, which means that you're also benefiting on top of that. Now, let's give another example where, if let's say they are potentially going to be inheriting, say, a property, rental property for that matter. So, which means that there are certain things we call them rollovers when it comes to capital gain tax. So, remember, when someone passes on, you're deemed to have sold your assets, which means that things like capital gain tax kicks in. But however, if you bequeath these assets to your surviving spouse, then it means that particular capital gain tax is not going to be paid by you having passed on, right? We're going to push it back forward until your surviving spouse passes on. Only that time then will calculate the capital gain tax. So there's more benefits of sometimes of living, but however, of leaving some of the assets or estate to your surviving spouse. But it's also crucially important to actually analyze and do thorough estate planning. It's not as straightforward as it might sound like. So that's why it's so important to regularly, guys, do an estate planning. It's important, minimize cost and minimize costs like things like taxes, so that you don't just unnecessarily so pay those deathbed expenses. You can actually minimize them and pass on as much wealth as possible to your beneficiaries. Good luck.